So Bausch Health's latest earnings report, on the surface, looked pretty solid. But the real juicy stuff, the stuff that tells you what's really going on, almost always comes out in the Q&A. So we're going to skip all the prepared remarks and jump right into the tough questions that Wall Street analysts were throwing at Bausch's top brass.
All right, let's get into it. We're going to break down the 4 key themes that really dominated the conversation. We're talking about their blockbuster drug, big regulatory threats, what's coming down the pipeline, and of course, their financial game plan. This is what was truly on everyone's mind.
Okay, first up, the company's absolute powerhouse drug, Ziffican. Analysts have sharp eyes, and they immediately spotted something kind of curious in the numbers. They really dug in, trying to figure out what was actually driving its awesome performance this quarter. And here it is. This slide lays out the puzzle perfectly. You see, revenue for Xifaxan shot up by a whopping 16%, but the actual number of prescriptions, the volume, only grew by 9%. So naturally, the first question out of the gate was, where on earth did that extra 7% come from?
So here's the answer, straight from the CFO. And it's a really crucial point. This wasn't some sneaky price hike. Nope. It was a one-off accounting benefit. See, Bausch decided to exit certain government pricing programs, and because of that, they got to release some of the cash they had set aside for rebates. That move basically gave the revenue number a temporary sugar rush for this quarter.
But here's what's really interesting. Once you strip away all that accounting noise, the real story underneath looks even better. This 14%, that's the growth in new patients starting the drug. That tells you that their marketing is working and that actual demand, real people needing this drug, is picking up speed. That's a super healthy sign.
All right, let's switch gears to the next big topic. And honestly, this is the elephant in the room for the entire pharmaceutical industry, the Inflation Reduction Act, or IRA. Analysts really wanted to know how the government's brand new power to negotiate drug prices was going to affect a blockbuster like Ziffican.
So the question is simple, right? How bad is this going to be? The company confirmed that their negotiations with the government are over, and we're going to see the new price pretty soon. So you can bet analysts were trying to get a feel for the potential damage to the bottom line.
And this chart, wow, it just lays out the stakes perfectly. You can see that about 30% of all Ziffimaxin prescriptions go to patients on Medicare Part D. Now that's the slice of the pie that is directly in the crosshairs of these new government price negotiations. The other 70%, not directly affected.
Okay, listen up, because this was probably the single most important thing said on the entire call. The CFO basically told investors, look, even with the price cuts from the IRA hitting us in 2026 and 2027, our overall profitability, our EBITDA, it's going to be stable. In other words, they're confident they can offset the damage and keep their earnings right around their strong 2025 forecast. That's a huge statement.
So, with the leadership team signaling that the core business is on solid footing, you could feel Wall Street's focus shift. They started looking down the road, asking, okay, so what's next? What's the next big growth engine? And that question led the conversation straight to a drug in their pipeline called REDS.
So what in the world is RED-C? Well, think of it this way. It's for patients with really serious liver disease, cirrhosis. And its main goal is to stop a nasty complication called OHE from ever happening. OHE is basically a decline in brain function, and preventing it is a huge unmet need for these patients.
And get this, we have a huge date for our calendars. Management confirmed that the final results from 2 massive global late-stage studies are going to drop all at once in the first quarter of 2026. This is a huge binary event. A real make-or-break moment for the drug, and honestly, for the company's stock.
In this slide, this right here is why Wall Street is so jazzed about RED-C. Look at these numbers. Right now, there are about 650,000 patients who already have this OHE complication, but there are almost 2 million patients with cirrhosis who've never had it. So if RED-C can actually prevent it from happening, wow, that blows the market wide open to something 3 times bigger.
Okay, for our last section, let's talk about the money, specifically the company's balance sheet. Analysts wanted to get a handle on the big-picture financial strategy, especially how Bausch plans to use its cash and, most importantly, how they're going to tackle their pretty significant pile of debt.
The CFO laid out a super clear 3-step playbook for their cash. Priority number 1, first and foremost, service the debt and pay it down. Step 2, plow money back into the business to grow it. And only after those two things are taken care of, way down at number 3, would they even think about returning cash to shareholders. The focus is squarely on steps 1 and 2.
Which, of course, led to the next logical question. It's one thing to chip away a debt with the cash your business generates day to day, but to really make a big, meaningful dent in that number, you probably need to make a much bigger move. So what's the plan for that?
And the CFO didn't beat around the bush. The answer was direct. He said the most probable outcome to truly solve their debt problem is to sell the remaining ownership stake in Bausch + Lomb, the eye care company they spun off. That's the big financial lever they've been holding on to, just waiting for the right time to pull.
So as we wrap this up, a really clear picture starts to form, doesn't it? You've got a company that seems to be handling a big pricing threat to its main drug. At the same time, they're lining up what could be the next blockbuster. And they've signaled a very clear path to fixing their balance sheet. So I guess the big question this leaves for investors is, can they actually execute on all three of those things?